Good morning, and today Tuesday, August the 1st, 2023 is the first trading of the month August, and yesterday is the last trading of July. So this week is special right there. We have 2 months, July and August. Okay, let's look at the setup. We did review yesterday. Basically, we saw this move is very strong up move at last 15 or 10 minutes of trading, and we wonder, wow, how do we entry, take an entry on this move? And we see this auto block, and we see there's no retest at all. However, if we look a little bit further down, we can see it's clearly beautiful and set up for it to entry here. You see the auto block at exactly midnight, you see, and right there is the price of the midnight open right there. You see that it come back and touch that level. This is your order block, displacement, fair value gap. You have everything in here. Huge move up, right? And then it's come down. It's retest. So that's our entry right there. That's a beautiful setup right there. And I did take screenshots of that when I do further review. I see that, you see. So fair value gap, auto block, fair value gap retest, and it's a long setup for us. And another thing that it make our requirement, you see that buy sell liquidity, sell side liquidity was taken one time, taken a second time, boom, you can go in a second time right away. You know that as soon as it retests this auto block, it will bounce back right away, right? It will bounce back, and whether this retracement up here is gonna be reversal or it's gonna be hit this so-called auto block up here or resistance up here and keep going down. In this case, it go and up, and it's gonna take the buy side liquidity from that. So that's, and our target, for this trade, our target symbol right here is the I think this is the order block at 940, a very key level right there. You see it tested this level 2 times and going down. It's order block. You remember we discussed this setup before. It's order block, fair value gap, displacement, and then retest one. That's why. So this level is very important, very key. So that's the reason why we anticipate, this setup, we're gonna go up there and revisit or retest that level. So it's a beautiful trade there if we can detect them or identify them right in the real time right there. So that's the purpose of our today or every day. If we try to improve our reading, the price action or the liquidity run that the algo use, so we see the signature, so we can detect it in the real time. Our eyeball right now, we are doing right now just your eyes right now at a discretionary trader. We just use our eye right now. Later on, we are good at that, then we can automate them, we can code them. But our first step is that we need to acquire that skill first before we automate them, right? You don't have automate them if you don't find a setup that have an edge or working. So that's our purpose. We exercise every day. It's like your physical exercise. So we exercise every day, so our ability to recognize the setup in a real time, we keep improving every day. So let's go back to this setup, right? We see the auto block, therapy test, that one. So that is the one I want to show you right there. You see, seller taken second time, it retests that auto block, huge auto block right here, and boom, it go up. Okay, so that's for a follow-up on yesterday. For today, we see something interesting, right? You see that yesterday the run up at last 10-15 minutes, very surprising, right? But if you think about it, it's not surprise at all. You know why? Because it came down here, it take all this buy side liquidity. Because I look at the market news yesterday, it said that the sell side liquidity were imbalanced. That means a lot of people, long. So that's why it going, it take all the liquidity, and then it go up to check the buy side liquidity. And today in the pre-market, we noticed that this is called aftermarket. It take out the prior day high, which is the buy side liquidity, and look at that. After it take out, boom, it gone down right away. So this move is just a liquidity grab, not a market structure shift, right? So that's the distinction we need to make. But the good thing that is the on-way retracement. So you on-way have a high properly whenever it touches the high time frame, BDRA or a prior day high, prior day low, in this case prior day high, then it will always retrace back, and you can always take this short. If it not come back a little bit here and it bow back, then it will hit your stop loss. You move your stop loss as soon as you get in trade, try to move your stop loss to break even, and you have break even trade right there. But if it go to second scenario, which is it go become reversal, then you have a huge down move right there. Okay, so go back. I see the very first thing I saw is that we see that right now is take out the prior day high. That's our observation. Here's the London section right here. You see it's a move down. So then what? Then hold on, give me just a second. And we see that the new week opening gap right there is the error we see. Yesterday it go above that, and now it's coming down. It retests and it going down. Let's see if it when it open, it retests this new week opening gap, and it come down. Let's see what the new we observed so far this morning. Yeah, and another thing that we see is the smart money diversion. I think it's very interesting. It gives us some idea that where the market is heading to. So it looks like that we're gonna head in down move right now. Okay, here's the so-called smart money diversion between the SPY and QQQ, right? You can use the same that you can use for Nasdaq future, which is NQ and the ES. So you see the diversion right here. So yet in the pre-market or after market yesterday, the SPY make a higher high, but the QQQ failed to make a high high. It make a lower high right there. So that's a diversion right there. So that means it's very safe to go in and short SPY right there. For the QQQ, we don't know. It may go up here and take the buy side and go down, or that's it. It's gonna, retrace up here and go down. But at least we know that the market start going down right here when the diversion between the QQQ and SPY right there. You see the heel down move right there. So it's a second leg right here. They both make a low right now. So let's see. That's the last thing I point out is pre-market right there. So just recap, right? In pre-markets, the VIX still, in the range of 12 to 15 point right there, right? Yeah, and one more thing I want to show that we start see, like we mentioned yesterday in the review, pay attention to the Monday candle 9 o'clock for 4-hour time frame. You see, so yesterday we have low right here, right? It decoded by the yellow, so it right here, there 13, okay, no, they're here. You see 9 o'clock is down close. You see it so far on the 3 weeks before. We see the Monday, the candle at 9 o'clock they are up close. So yesterday it down close, so it gives you some idea right there. So whenever you see the down close candle for the Monday, then you see that the candle at 13 hour it up close, then you see that there's something change in the market right there. So that's one of the things I want to point out. All right, let's watch to see how it's come out, the market move today, right? So the pre-market volume is 1 million. Really good. It's a huge volume right there. And so it dropped 0.38%. Yep. All right, market started. So see the gap right there. Pay attention to this gap. Yep, pay attention to this gap right here. You see it go up, let's go down. Yeah, you can see right here. You can trick the whole thing right here. It's right here. You can trick it's a bearish breaker, right? Let's see how it's behavior. You see the bearish breaker, and then it break down that bearish breaker. It's a swing low. So the bearish breaker is at a swing low. You locate a swing low, you see, break value gaps. If you want, it's the setup right here. You're gonna short them, okay? But to see if that reliable, like look at the 5-minute time frame to see where is my. That's I had to skip through where is my 5 minutes. I couldn't find my 5 minutes. My 50 minutes. My 5 minute right there. Okay, that's it. We look at the 5 minute right there. Let's look at the 1 minute to see. So here's our 1 minute. See how it go. So the first candle 1 minute is down. Oh, short now. Okay. Short now. Let's see. We see the setup right on the 5-minute time frame. Bearish breaker. At least we aim at around this target right there. Let's do it. So what the setup? The setup is bearish breaker, fair value gap, right? Retest. We saw this setup is a short setup. We saw this setup on 5-minute time frame. The entry time for us is, I think we better enter at 9:30, but it's okay. In this case, we enter at 9:32. Right, the best is 9:30. Right, just 9:30. Okay. And what do we see is that, normally we want to see the sell side liquidity were taken. No, I mean buy side liquidity taken. But we don't see it. Actually, we see the sell side liquidity in the opposite. So, okay, let's see how it's play out. But our target is very short. It should be around this area, right? So it should be targets be a sell side liquidity, prior swing low. Yeah, around here. So it's quick trade right there. So let's see how it go. Okay. Wow. Okay, let's see. We put a stop loss right here. Right. Wow, we took out. So that's a feedback that we receive from the market right there. That means that trade is a lost trade. So we receive the feedback, we will do better. Yeah, so you see that we go in, but we want to go short, but we don't see the sell side. If you want to short them, we make sure that at least you have the buy side liquidity were taken. In this case, the sell side liquidity were taken. So that's a low property setup. Right, you have a setup right there, bearish breaker, but so we learn our lesson. We learn the market always give a feedback and we improve that. So let me take a note of this one. We can analyze why that trade is a loose trade, lost trade, losing trade, and we learn from that. So set up a So we see if we look at 5-minute time frame, we can see that the sell side liquidity was taken right here, and also a huge sell side liquidity taken. So you don't want to short when you see that. So that's the lesson we learned right there. Let's save it as default. Okay. Yep. One hour time frame. Man. 1 hour time frame. Yes, look at 1 hour time frame. We can see why it rebound right there. Why it bounce back from there. It weekly. Okay, here's 1 hour frame. You see right there, it come back and it retests this again. It is 1 hour. Hold on. No, this is 4 hour. Let's look at the 1 hour. Ooh. Yes, right here you can see clear 1 hour. There's a bullish breaker. Right, it break down that, and then it come back again. So let's see it behavior. Right, retest into this 1, 2, 3, 4, 5. Pre-market 6 at 9:30 or at 9 o'clock. Yep, you see that it make a high low, so it could be a bullish today. Right, let's take a look at the 4 hour time frame. We see, you remember the yes, okay, hold on. Yeah, 4 hour time frame give us some very good scenario right there. Okay, go back to 4 hour time frame. So this is the Monday 9 o'clock candle. Yeah, if bearish, we want it to be stay below this guy at least at this level, right? Let's see. And it's also coincident with the new week opening gap. So let's see how it's respond or react to that level, right? We see the glow of the candle 56.63. Yeah. Yeah, 56.63 right there. A little bit crowded, but here, that's the level, very close with the bullish order block 1 hour time frame. So that around that level. So let's remove this for now. Okay. Right. So this level is very important. We want to see this above this level. We see a new wick opening up right level right here also. Yeah, see how it's handled like that. Oh, okay, look at 1 minute. Yeah, that's the level we watched right there. You see, it stay at that, consolidate at that level right there, exactly. Man, that's amazing right there. Let's see how it's handled, how the price react at that level. Let me make the color a little bit transparent, easy to see. Here, much easier on our eyes. Okay, so we see order block, no further gap as you consolidate. You can see this a bullish breaker and further gap retest, so that can be a long setup for it right there. Oh, you see that candle? All of a sudden it's just jump a gap right there. Okay, we can show them if we want to show them. You know why? Because we see the sell side clearly taken now. Right? We see the buy side clearly was taken right there. I mean, if we want, show them. Put your stop loss up here. Okay, so I short it. What the setup? Well, we just have buy seller query taken. What else? Oh, yeah, 5 minutes. We don't have a setup. Yes. Now, if we take this trade, it's a so-called 50%. You don't have a setup. The only we have right now is just sell side liquidity. Let me see on a 1 hour time frame. Yeah, on the 1 hour time frame you have a setup. Or yeah, 1 hour. Yeah, I do. Okay, let's do that. That's the breaker for the 1 hour time frame. So we this will be a breaker, bearish breaker, fair value gap, retest on 1 hour time frame, and this is a short setup. Entry time 09:45. exactly 45, that's right. Targets is a sell liquidity, the brighter swing low down here. Yeah, you can put at this level at 9 o'clock level. Good level, our target, our stop loss right there. Short breaker, fair value gap, retest, X1, so setup. Okay, so 1 hour time frame. I show you what we see on 1 hour time frame. So basically, excuse me, here, the breaker, right here, right? Break through this with a fair value gap right there, fair value gap right here. See that? What? Oh, that one is the one with the bullish breaker, bearish breaker on 5-minute time frame. Let me move that. You can see this is bearish breaker. It break through this, right? A little bit right there, but I have a fair value up right there. Now it retests that, so it gives you a setup right there. Right there, yes. This is our, it's a London, right? London session. Here's the setup that I show you. This 1 hour bearish breaker right there. See that? Let me transparent a little bit to make this in our outline. See that? You see bearish breaker, fair value gap right here, retest. Let's see. Ooh. Okay, go up to here to see we got stop out or not. So we put our stop loss up here. Let's see it stop out. So we entry at what time? Look at the screenshot again. So we enter at 9:45. Okay. 9:45. Where's our 9:45? Right here. Yep. We have a good entry. 9:45 right here. And we will stop up here. Let's see how much we reach. Oh, we reach 26 cents, which is within our risk level. Well, we reached the trade maximum 50 cents, okay? And our target gonna be 1 to 2, at least 1 to 2 reward ratio. And we reached most 50 cents for one trade. But she look like it's a bearish breaker over here, fair value gap retest, so that can be a good long setup for us also. So let's see, and our target gonna be this level, at this level right here, at least, right? All right, so we are reach 30 cents and get 80 cents, so it's almost 1 to 3 reward, risk reward ratio first right there. Okay, so let's see how it's playing out. That make a little bit better. Okay, so we reached 26 cents and gain 80 cents, so it's almost 1 to 3 risk to reward ratio right there. Let's see. So we short 2 times, right? We short right here, and we got stop out. Short at it level, and we short at it level. Let's see. Let's see how the diversion happened right now. Well, so now we see from diversion, look like a spike gonna come, it's gonna go up, but we don't know how far it go up because the prior day low was taken, right? That's the reason it's bound. When the prior day taken, it's onward bounce. On the retracement, this is a onward rebound, so it's a must move right there. So we can capitalize on that. That'd be great right there. On with the retracement. Whether it's gonna retracement this level or not, that we can see. But I don't know why. So it's swing both end right now. You see that? The priority high was taken and our prior low was taken. So it break through those range. So according to this logic, it will go up, right? Buy side will be taken first and sell side will be taken later. Then it's gonna go up. Let's see. So we short right here, we're still in a trade. Let's say we are experiencing discomfort right now. We are actually in a trade because it go against us, right? It go close to our stop loss. So that's the beauty of trading right there. You have to go through the discomforts in order to hit the target. Sometimes, most of the time, you have to make a discomfort decision right there. So right now we are in the first 27 minutes of the trading day, roughly 30 minutes, and here's how the market moving: an up move, a retracement, and then a retest to see if you take out this buy sell liquidity or it fell if we will swing, follow swing, then it come down. Let's see, my friend. We watch 4-hour time frame really to see if close above the Monday candle at night. Wow. Let's see if it's check our stop loss right there. But look at the 1 hour time frame, we still believe that it's gonna come down. You see the 1 hour time frame? You see that? And if you do a trend line right here, it looked like a rising wedge, right? They call rising wedge right there. So down move and rising wedge, and another down move. So basically, this is consolidation right here. Try to drop the sell side liquidity, and then it come down and check it. It may go down and retest the area. I don't know you see the pattern or not. You see that? So they call it rising wedge, right? Yeah, rising wedge, and then it's gonna come down, right? Check. You know, check by side liquidity and normal by side liquidity, build up a lot of sesame, and it boom going down. Wow, it's not going down. We see it go up now. Wow. So we are stop out the trade right there. So 2 trade on the road, we got stop out. The market tell us no. The market say no. So we have to be in sync with the market instead of out of sync with the market. So 2 times we out of sync with the market. So let's watch. Alright, we put into our base for today. We took 2 trades. When we pretend we don't haven't checked any real trade, just practice so far. So we practice 2 trades and 2 practice trades, not real trade, but 2 practice trades, and both of them is come back negative. The market tells us say no because we're not in sync with the market. So let's see. Very powerful move. Can we take a look at a daily time frame? See anything? Wow, we see the diversion now. What we're gonna do? Or we take advantage of this, or continue waiting to see the diversion now? This one may continue to make a low, a high low, but this one make a high high. See that? That's the reversion right there. Very interesting, my friend. And we are in the just finished the first 30 minutes of trading day for today. And today is Tuesday, the first trading day of August. Let's see. Oh, the first day of August, this could be the high, the open, right? This is the open for August. And then it's going to be what? It will be the high, right? The power of 3, right? Open, high, and then boom, go down. Yep, that's the theory we come up. Let's see. Let's look at the monthly. Where is monthly? Monthly is M1, but capital M, big M. Minutes is M. Wow, you see that? Give you some clue. Right here is the monthly table, right? August is open, but open below January close. So let's see. No, not January, I mean July. So it's just basically open below the new week opening up right there. That's the monthly chart time frame first. Let's see what's the weekly, how it look like. Okay, so it's a Dow low right now, right? Open here. Yesterday, yeah, it's open because it's open below the yesterday, so that's the reason you see the Dow close candle. So week 30, right? And the average for this week, high and low is about $4. Remember this week the property that is up is only 38%, so you have a very high setup. I mean very high property for it to go down close right there. And this one we have a 30-year data, so it's like very statistically significant right there. It's a lot of data sets for 30 years of data. Okay, go back to 1 minute. Surprising. Well, another buy sell liquidity was taken. You see that? Continue buy sell liquidity was taken. This candle is huge. Pay attention to this candle, my friend. A 10. Wow, look at this candle. Wow, you see, we short them, but we have to make sure we go in at the right time. So let's remove this for now. This is our order block right here. Ooh, you see that? Yeah, I thinking. You know what? Earlier, I say, wow, if we want to short, why you want to short low right here? Why don't we wait until we take out the equilibrium for this swing high on time frame? And it did. And they're a perfect short right there. Okay, Okay, then going and short right here. Buy selected was taken, right? But what the setup? If you don't see any auto block retest or anything, right? You have to see the setup is either auto block or either breaker, barrier breaker or bullish breaker. That way, my friend. Okay, so you have auto block, you have fellow gap right there. Okay, go in and check it, right? Yeah, right here. Take short. Why? Because fellow gap right there. You see that? Go and check it. Check it now, my friend. So now we have a setup. We have auto block, fellow gap, retest, right? And this one is short setup. And what the condition? Condition, we have a buy seller clearly taken. Yep, we have a condition to take it. And entry time frame, we go short 3 times on a row right now. Oh wait, that's right, the first 10 minutes on an hour. Targets, short liquidity, but this one only in the money, right? Or price swing low, which is with Owen. Let's open at 9, right? 09. Okay, if we go here, then our stop loss gonna be what? Our stop loss gonna be around this area, the mid of the wick right there. Okay. All right. Happy. All right. Wow. We are in the money. Yeah, our stop loss will be around here. So let's say we enter here. Asset level, right? And we put our stop up right there. Not much, exactly 25 cents, risk 25 cents. And how much we're gonna gain? Almost $1. So 1 to 4 reward risk ratio right there. Right. So far we learned 2 lessons, and now let's see if we learn. Yeah, we will learn our lesson, right? All we learn, right? Win we also learn, and loss we also learn, so we can improve. That's the beautiful in trading. There's no lose. You always improve. Lose is chance for you to learn. Wow. You know, we also know that in this time frame, we want to see an auto block in there, and exactly what happened. Buy sell taken, and you see auto block, boom, retest going. Because we already marked this time frame, right? Right here, we mark the right here on the 5-minute time frame. You can see we mark from 10 o'clock to 11 o'clock. That's the critical time window. Whenever we see the favor gap in that window, we will take the trade. And that's exactly what happened. It's auto block, retest, take the trade. Now we are in good trade right now. Now we can move our stop loss. We can move to break even right here. So we are in a free trade right there. Free right trade right there. From only in the money. and we move here. Let's say it stop it out. Let's say that we put the break even right here. Let us stop out right here. Let's see if we take it out. Right. What we want to say right here? We say stop loss to break even. Yep. Wow, look at that, my friend. Beautiful. See that? Yeah. Let's take a screenshot right here. Remove it. Put the note into our database. So basically, we move stop loss to break even at 10-12, right? We go in so basically we enter trade 10-8 or 10-9. I think we go at 10-9 or 10-8. Let's look at the swing chart again. We have beautiful trade today. The first two trade 10-8. Oh, perfect entry, my friend. Yes, 10-8 right here. 10-9 will be better, but 10-8 is okay. And you see, wow, it hit our 9:30. Let me see at 9 o'clock. Wow. Wow, should we out now or wait until it hit our target? Wow, hit our target right there. We out of the tree. Man, beautiful. So we lose, I believe we lose about 50 cents. Let's say we lose two trade 50 cents and now we get it back. We get 99 cents, right? So we get 45 cents right there, 49 cents. So it's a winning trade for us now. Oh man. Beautiful. Man, beautiful. Thanks the market. The market give an opportunity. Give thanks to the market right there. Appreciate the market. Always love the market, appreciate the market. No fear, no hate the market. That's our attitude right there. That's our mindset right there. $50. So let's review the trade we take so far this morning. Three trade, right? I mean, we exercise, we don't take a real trade. What's the idea, right? We first two trade, we short them, we lose 21 cent, 26 cent for the first trade, and 25 cent for second trade. And third trade, we short them, and we win 99 cent. So overall, we win 48 cent. Basically, 99 cent minus 51 cent with 48 cent. So we are end up in the ring right now. Beautiful. Man, can you believe that? If you look in 5 minute time frame, then we can see that our target is about right. You're right, this order block right here. So it's gonna retest this order block. So we put our target right there, it's right. Retest this order block right there. If we check out the buy sell side real quick or not, that will be another story, but for sure it will retest the order block. This bullish order block right here. It retest it right there. You see that? Wow, we're gonna take out the sell side liquidity here. Low. Wow. Yep, that could be our second target right there. Sell side liquidity. I think we did put that in the note. Right. And look at that. I think we did say that. Right here. Sell side liquidity. I'll open it now right there. Sell side liquidity. Beautiful. Ooh. And exactly that's what happened. Look at the 4-hour time frame. I think we did go through that. And we already see it's coming for our 4-hour time frame, right? You remember we did go through the Monday 9 o'clock candle. If you see that, it will retest that candle, and then boom, it go down. You see, if retest one, retest twice, and go down. One of the things that we need to get the midpoint of this candle. I think we do have. Do we have this? Yeah. I need to do something right here. Okay, I need to put this indicator right here. Give it the mean. Let's do it now. I think I have it somewhere. Let me copy and paste them. Hold on, let me do something like this. Ooh. Let's see. I mean, on the 4-hour time frame, you see it's real bearish. I think it's gonna come down hard. See that? What's going on, my friend? Oh, it's 4 hour. Yeah, you see huge rejection right there. So this one, it's a liquidity grab right there. It's not market structure shape. You see that liquidity grab, and then boom, come down. So we anticipate what you're gonna take this buy sell liquidity. This a failure swing right here, right? Failure swing win high, then boom, it go down, take the sell sell liquidity. Right, because there's not much, there's none, there's no buy sell liquidity here. That means people stop shorting. No one shorting, everyone gonna buy it. That's the reason why more sell sell liquidity over here. And you remember yesterday we did see the note the news from the markets, I think I put it somewhere, it say, let's open the journal yesterday. Wow, it reversed. Very interesting, my friend. That's the, here's the note I took it at the market close yesterday. You see, it said that the market closed on unbalanced sell-side liquidity, 632 million around 2 p.m. almost 3 p.m. yesterday right there. That means there are lots of sell-side liquidity down there, and that's the reason why it's gonna come down today. Let's see. Okay, let's look at the DR model to see how its behavior, the DR model behavior today. So the DR model states that by 10:30 we will know either the high of the day or the low of the day. On a regular day, normal day, not a high impact news day, right? So you see another auto block right here, right? Auto block, I mean a fair value gap, right? Retest and go down. So this one is just, but you see this, you do see that the sell-side liquidity was taken, just taken right there. See that? Here. So if you want to go long, then that's the condition you want to go long. You just see sell-side is taken, right? But you want to go long, what's your target? Well, you want to go target, then an immediate target right here. That can be a reasonable right there. But if you go up here, it's a bit risky because this can be a retracement and then continue to go down. So when you enter this, the trade right after the liquidity was taken, and you're going, you keep moving your stop loss very quick to break even, because you want this trade to be from break even to profits, right? Because this trade is you banking on the retracement. All right, 4 more minutes, we will see. Yes, we still see right here in 1 minute time frame, auto block, boom, fair value gap, takes a liquidity and retest that fair value gap. 1, 2, 3. Let's see. Let's see how this candle close. If it's closed down, then I believe we done. Or you can treat this whole thing is auto block, right? And then this what is swing low, auto block, but we don't see any gap right here. So maybe go up here, around here, retest, and then come back here, and then boom, go double bottom. So that is another scenario for us right there. So basically I say right here, go here, go up here, check out or make the equal low, check out agree, okay, and then come here, retest this auto block around here, boom, and then go up, take the buy sell again. So that's one of scenario that it may happen. If we are banking on the reversal, but yeah, that can be happen, because look at, you see, yeah, wow, you see, yep, that's the reason why when we shorted our target, reach the target, we get out. Otherwise we feel discomfort right here when it's eating up into our gain right there. We want maximum out again, then get out. Alright, 2 more minutes and then we can close up this first trading hour for today, and then we come back later in the evening for a end of day review. Wow, that's the huge return to order block. Let's see. I mean, on the 5-minute time frame, you can see there are logic, there are scenario that it may reversal from here. You see, it's like a boom, double bottom right there. Oh, let's see. Never mind, I think look at the 15-minute time frame, we see more. Okay, let's deal this one. Okay, so now on a 5-minute time frame, we can start see the DR model indicator right here. You see that the DR imply high, DR imply low right there. But anyway, I gotta go. Talk to you guys later. Bye for now.